I have been accused by some of China bashing and also being too bearish, too pessimistic. But honestly, I just follow the data. I just follow the stories. And there's been, over the last month, a lot more red flags, a lot more warning signals coming out of China. In fact, even from the PBOC, as you can see from your screen. There's two stories that I cut together. One of them was from Bloomberg News with the People's Bank of China signals policy to stay cautious amid uncertain future. And the governor of the People's Bank of China, Governor Yi, said the downturn will stay for a long time. And then also a recent stress test for Chinese banks that a lot of them failed. That did not do too well, and this has been telegraphed. The Western media did not cover this. The Epic Economist did a video on this in the last week or so, that late last year, early this year, there were Chinese banking regulators speaking in Mandarin who were talking about how there was going to be a lot of bank failures. Kyle Bass said that over 500 banks were flagged for potential bankruptcy. He's been talking about this at length, but really, in the last, like I said, month, there's been so many stories, and I don't have time to read you all the stories, but let me just talk about some of the headlines, and then I'll read some of the stories that I think are the top. I have about 10 windows open. So first off, there's a really good interview if you have a Real Vision television subscription. I don't think they've released it for free yet. It was published on November 19th, 2019 by Brian McCarthy. It's called Dollar Liquidity, the Endgame for China. He goes in about 36 minutes or so extensively talking about the problem that the Chinese economy has. And a lot of it's with the dollar, that they have too much dollar-denominated debt, and they've made a lot of poor decisions with central planning, misallocation of capital, credit bubble, real estate bubble. The real estate bubble now, according to Jim Chanos, depending upon how you measure Chinese GDP, their speculative real estate bubble is now up to 25% of their whole GDP. So this is not building bridges that are needed. This is not building trains, high-speed bullet trains that are needed. This is speculative real estate. So some people have said, who I've referred to Real Vision TV, that it's not always worth it. There are some good interviews there, like that Japan interview I talked about last night on last night's podcast. The Brian McCarthy interview, I don't think it's out for free yet. Maybe they'll release it soon. It's still behind the Real Vision TV paywall. I spoke to Emma Molman, and she listened to the interview, and she says it's really, really good. That she agrees with Brian McCarthy on a lot of his points. And she thinks that China will go more isolationist, and that China's economic central planning cannot work with what the U.S. wants to do with its economy. That they cannot coexist together. They cannot play nice. So to use a kindergarten analogy, we learned in kindergarten, or at least we were supposed to learn, if we cannot play nice, we should not play together at all. And that may be what has to happen for the U.S. and China, is that the U.S. and China have to take a break. So let me go and let me talk about the trade negotiation update. Really not much has changed since May. China's demands have been what I said in my trade deal negotiations update about 2 months ago, when I was talking about Huawei and the importance of Huawei, and how China, before they agreed to anything, even phase one now, China wants all the tariffs taken off. Not a few, all of them. China wants all the tariffs taken off, and Trump signing that bill, the two bills on Thanksgiving for Hong Kong, for support in Hong Kong. It also, if you're not familiar with the DC metro area now, this now gives, having backing from both political parties in Congress and the president, this now gives the U.S. State Department and the CIA even more legal cover to start even more shenanigans in Hong Kong. So this is not going to help things with the Chinese at all. The Chinese, in fact, are going to want that ended. And so things are going in the entirely wrong direction. But I think what Trump is doing, before I get into these stories, I think what Trump is doing is if they're serious about enforcing the Magnitsky Act with any Chinese official that is tied into Xinjiang, which is where, the slave labor camps and the Nazi-style concentration camps, most of them are. And they're going after, financially, any Chinese official that's either in that province or ordered that stuff, is a combination of that and the Hong Kong bills, and they're trying to prevent Chinese political elites from laundering more money out of the country and getting dollars. So if they block Hong Kong and they shut down the route in Hong Kong for Chinese elites to get money out through Hong Kong, one of the easiest ways for Chinese elites to get dollars and get their savings and stolen loot out of mainland China was through Hong Kong to get dollars. So I think that's what Trump is also doing by signing the bill, is now there's U.S. government entities that are going to go in there and try to block the Chinese elites from getting access to more dollars and trying to shut that down, trying to stop the Chinese elites from going and buying 10 homes in the US or 10 homes in Vancouver or 10 homes in London or 10 homes in Australia, which is what's been happening in a lot of aspects for 20 years now. Emma, I spoke to Emma about this, and Emma thinks that, defection, if things continue to get worse and there's a lot of red flags with the Chinese economy, there's large bond defaults now, especially in dollar bonds. So even though the RMB, the Chinese yuan, is at 7.06 Chinese yuan to the dollar, so the Chinese government has manipulated the exchange rate back down. So there's no warning signs from that anymore. It's pretty much under control for now. But beneath the surface, with the warnings from the People's Bank of China, and there's been multiple warnings just in the last week. There was the stress test that was released at the end of November, and then Governor Yi also came out and gave, from the People's Bank of China, also came out and issued another warning. And he said the downturn will stay for a long time. So Emma thinks that defections, if the economy does get a lot worse, that the elites in China also have an escape plan because they own a lot of property. Like, she compared it to Maduro. She compared it to how Maduro had to leave Venezuela, or planning to leave Venezuela, and then also the guy from Bolivia. I forgot the guy's name. The former head of Bolivia, who's now in Mexico. He has a mansion in Mexico, or a couple mansions in Mexico. Okay, so let's get to this article. That one of them that you can see on the screen, People's Bank of China. This is from Bloomberg, December 1st. People's Bank of China signals policy to stay cautious amid uncertain data. Downturn will stay for a long time, says Governor Yi. China's central bank governor sounded a cautious tone on the health of the global economy while signaling that the nation's monetary policymakers will continue to refrain from large-scale easing steps. That's because inflation or stagflation, higher food prices, are already a problem in China. We know this from China's own economic data, from the National Bureau of Statistics. Even their own data saying this, that there's higher pork prices. Pork prices are up triple, according to China's own data. Policy should be prepared for a mid- and long-distance race and stick to a conventional approach as long as possible, according to the article by Governor Yi, published Sunday on the WeChat account of Kishi, the Communist Party's flagship magazine. The comments were published a day after a factory gauge showed an unexpectedly strong improvement in November on a rebound in new orders. There's also been a big credit reflation in China. The amount of credit that was flowing through China, it had dropped, I think, to the mid single digits. So credit growth was down, I think, to like 5 or 6%. It had temporarily dropped in Q2 and Q3, and I think now it's back up into double digits, 10, 11%. So they're growing the credit Ponzi again, even though there's a lot of evidence that there's problems with the amount of credit outstanding and the loans cannot be paid. Comments were published a day after factory. China is seeking to strike a balance between supporting a slowing economy that has been affected by tensions with the U.S. and controlling financial risks. The nation also needs to be wary of a contraction in credit as downgrade pressure increases, according to comments from a banking regulator and state media over the weekend. The official Manufacturing Purchasing Managers Index rose to 50.2, which is not contraction anymore, according to data released by National Bureau of Statistics. Well, the question is then, are they selling the goods, or are they discounting them, or is the inventory piling up? That's the first rating indicator expansion since April and may give support to the idea that the world's second largest economy is stabilizing amidst stimulus measures and better external demand. Seasonal factors influence the rise, though, and downward pressures on China's economy, including factory deflation. Factory deflation means that the goods are selling, they're discounting the goods. The goods are selling for lower prices. The world's economic downturn will likely stay for a long time. He wrote, we should stay focused and targeted while not competitively lowering interest rates to zero or engaging in quantitative easing. Economic development should not be simply judged by gross domestic product growth. That's because it shouldn't be judged by gross domestic product growth, because the GDP numbers are going to be ugly. And there was an article on Zero Hedge. Let's see here. I have a lot of windows open from November 21st about how China adjusted the GDP 2.1% higher from 2018. If you want to read Evo Morales. Yep. Evo Morales was the dictator who bounced. So Maduro hasn't left Venezuela yet, but he probably will. He almost left. And Morales was the one who's, I think, in Mexico now. After what he rigged an election. Morales rigged an election. Or at least there's strong accusations of it. So the article continues with more analysis here. Let me skip to the Zero Hedge article from November 26. A $20 trillion problem. More than half of China's banks fail central bank stress tests. So, continuing with the, okay. In our latest look at the turmoil among China's small and medium banks, which included not only the recent bailouts and nationalizations of Baoshang Bank, Bank of Jinzhou, China's Hongfeng Bank, all three of those. So Baoshang Bank, for a brief timeline, Baoshang Bank was May. Bank of Jinzhou was, I think, a little bit under a month after that. And Hongfeng was, if I remember correctly, it was July. So we hadn't heard a bunch of bank failures. There was a couple small ones that have happened in the last month or two. They were mostly small, but now there was another medium-sized one that just failed. Zero Hedge ran the article. Here we go. November 17th. Another bank with 620 billion yuan in assets. So it's a medium-sized bank. But there were two smaller ones that were the Henan Yichuan Rural Commercial Bank, which the Chinese officials were blaming on malicious internet rumors, even though a lot of the people who were pulling their money out of the bank accounts said that they didn't pay any attention, they didn't pull their money out because of internet rumors. But they blamed it on foreigners and malicious internet rumors. The bank that failed most recently was Harbin Bank in Heilongjiang province. I have an article about that if you want to read it. There's a bunch of Bloomberg articles. A too big to fail toxic monster plan, China's Plan C, talking about the other small banks that are in trouble. There's been bond defaults. I'll read a couple of those articles. Back to this stress test that was failed. And remember, this is a global problem. What have I been, for the last couple weeks, I didn't do a story on this yet. There was European banks have failed the Basel III stress test. They're over $400 billion undercapitalized. Japanese banks, there's a lot of evidence that the next 12 months are going to be ugly for a lot of Japanese banks, especially the smaller regional ones. But the larger Japanese banks got desperate for yield and bought a lot of toxic garbage outside of Japan. So European banks, Japanese banks, Chinese banks, and American banks are part of the repo madness. We don't know which American banks are pulling repo madness. We don't know if it's a foreign subsidiary of a European bank or a Japanese bank that's access to the repo madness. But repo madness is massive. Over $300 billion now, according to Jim Bianco. Okay, so back to this article. Also, the two very troubling bank runs at China's Henan Yichuan Rural Commercial Bank at the start of the month in November. More recently is Yingkao Coastal Bank. And then also the one which was Harbin Bank. So there's now 6 banks that have been bailed out or taken over either by larger Chinese banks, one of the 4 state-owned enterprise banks, or the Chinese Sovereign Wealth Fund. And this is putting an immense amount of pressure on the 4 largest Chinese state-owned enterprise banks. They can't bail out everyone. They can't bail out all these small and medium-sized banks. They can't bail out these provincial governments like Hunan Province. The largest Chinese bank, which has over, I think it's the largest bank in the world by market cap. It has over $1 trillion market cap. It's ICBC. And they're being asked to do a $300 billion bailout over the next 4 or 5 years for Hunan Province. It just, with the market caps, it just all doesn't work. You can't ask a bank to bail out local governments, to bail out small and medium-sized banks, to bail out pension funds, to bail out the new Social Security Fund. Does this make any sense to you? Okay, it doesn't make any sense to me how the currency is still doing well. It's obviously manipulated exchange rate. Okay, back to the article. Further explain the reason why so many, for now, smaller Chinese banks have found themselves either getting bailed out or hit by bank runs is that in a time when China's interbank repo rates, China is also doing repo. If you're not familiar, they started it in January. It is a lot smaller. Their repo is a lot smaller than the US, even though the Chinese banking system is actually larger than the US. The Chinese banking system has, I think, 40 trillion. It's immense. The Chinese banking system is twice the size of the US banking system because there's more people, and they've also financialized their economy in rapid time in only 10 years. There's a ton of shadow banking, wealth management products, local government finance vehicles. It's really funny because the bank regulators I was reading through articles, and the Beijing was telling the local governments to police the small and medium-sized banks in the more rural areas. But guess what? The small and medium-sized banks loaned off the books with dummy corporations to the local governments. The small and medium-sized banks loaned to the local governments as with dummy corporations, local government financing vehicles. So the local governments are supposed to police the banks and regulate the banks when the banks lent to the local governments way too much money and credit, thinking that Beijing had their back and would bail them out. This does not sound like a good combination of factors. This sounds like a vicious cycle. Okay, so repo rates are, I think there was 2 emergency liquidity injections of $60 billion in a week. And I think repo is about $30 billion per day in China. So it's nowhere near the levels as the US, but China is doing other means right now to try to bail out the banks and trying to force larger banks to buy smaller banks. So they're doing other tricks. They're doing some of the similar tricks that the US did in 2008 and what Japan did 30 years ago or 40 years ago. Growing counterparty concerns. Increasingly more banks have been forced to rely almost entirely on deposits to fund themselves, forcing them to hike their deposit rates to keep their funding levels stable. This is what Hong Kong banks are doing too. Kyle Bass has talked about this. That some Hong Kong banks are so desperate because so many Hong Kong residents are closing their bank accounts, pulling money out. There's a lot of foreigners that had bank accounts in Hong Kong because years ago it was, on a relative basis, it was safer. And a lot of those people who were foreigners and had bank accounts in Hong Kong have closed out their bank accounts, and that's pulling capital out of the Hong Kong banking system at the worst time. Meanwhile, cuts in key lending rates since August to stimulate a slowing economy have only exacerbated net interest margin pressures on banks. In other words, with less income from lending and without the full suite of funding options available to much larger peers, interest rates that China's legion of small banks may have to offer to attract deposits could further undermine their stability. The irony is that to preserve their critical deposit base, small banks have to hike deposit rates even higher to stand out, in the process sapping their own lifeblood and ensuring their self-destruction. Or as we dubbed it earlier, China's own version of Europe's doom loop. Murray, if you're familiar with Austrian School of Economics, Murray Rothbard also talked about this in the free banking era in the US, where banks that were making very risky loans in the wildcat banking era or free banking era, small banks would offer insane interest rates to depositors, and the depositor would hopefully have to know, that the bank was going to take a lot more risk with loans or with gambling bets with their depositor money in exchange for the higher interest rate. And a lot of banks failed in the free banking and wildcat era. That was late 1800, early 1900, and that was one of the justifications, besides the Panic of 1907, for why the Federal Reserve was installed. One of the supposed justifications. There's a good Murray Rothbard book about this on the Mises website. Okay, so there's a bunch of funding difficulties. Okay, the Chinese banking system is 40 trillion financial system, so it's double the size of U.S. banks. And there's well over 4,000 small, medium, and massive state-owned banks. So the large banks are going to be asked to carry, the large state-owned enterprise banks are going to be asked to carry an enormous amount of the burden. ICBC, China Construction Bank, Agricultural Bank of China, and Bank of China. And also China Sovereign Wealth Fund. If you want to read more of the article, I will put it in the information and description section. Let me talk about the story that came out yesterday. It was updated yesterday. 2 China firms miss 526 million bond payments as woes grow. So this is Peking University unit fails to repay 285 million local bond. Tongshu Electronics skips payment on 240 million debt. 2 Chinese companies failed to repay bonds worth a combined $500 million on Monday, underscoring rising debt risks in the highly leveraged nation as the economy slows. Peking University founder group was unable to secure sufficient funding to repay a 270-day, 200 billion yuan bond, according to a company filing in the National Interbank Funding Center. Tongshu Optoelectronic Technology Corp failed to deliver repayment on both interest and principal on a 1.7 billion yuan bond, according to Shanghai Clearinghouse. The quickening speed of bond defaults in China, especially among ailing private firms, highlights the growing financial strain triggered by the country's worst economic slowdown in 3 decades and unabated trade tensions with the U.S. Last week, industrial firm Shiwang Group failed to pay a 1 billion yuan bond, missing a fresh repayment deadline on an already defaulted bond. So it's getting harder for companies to get funding help when facing a debt crisis unless they're centrally controlled companies and local SOEs, state-owned enterprises that have great importance to the local economy. What I would also add, though, is there's been evidence since August. Remember, the New York Times ran a story, over 200 billion IOUs for Chinese workers that had done work, produced goods or services to state-owned enterprises and also local governments, including government employees and teachers, that have not been paid for their work. So the state-owned enterprises are supposed to have easier access to raising debt and bonds, but the state-owned enterprises, a lot of them are not paying their bills on time or at all. And there's a lot of stories about this. I've been covering this now since August. It's getting harder for companies to get funding help, facing debt crisis. Okay. Already read that part. Founders' missed payment on the bond, which has a 15 business day grace period, is set to escalate concerns about the weak finances of debt-laden business arms of Chinese universities. The company and Tsinghua University Group, a top chip maker run by arch-rival Tsinghua University, have been under the spotlight in recent months following a tumble in their dollar bonds. Oh, there we go. There's the problem, dollar bonds. Then there was another article, I think, about state-owned enterprise. Here we go. China faces biggest state firm offshore debt failure in 20 years. This is from November 26th, a Bloomberg article. Tiwo Group's distressed debt plan is the first of its kind. The Tianjin firm has 2.05 billion of outstanding dollar bonds. A major Chinese commodity trader looks poised to become the most high-profile state-owned enterprise to default in the dollar bond market in over 2 decades. In a fresh sign that Beijing is more willing to allow failures in the politically sensitive state-owned enterprise sector. Tiwo Group has offered an unprecedented debt restructuring plan that entails deep losses for investors or a swap for new bonds with significantly lower returns. The company is owned by the local government of Tianjin and operates in a number of industries, including infrastructure, logistics, mining, autos and parts, according to its website. So it does a bunch of businesses, and I'm using air quotes, businesses inefficiently. It's a diversified loser of money, a diversified state-owned enterprise. It also has footprints in countries including the US, Germany, Japan, and Singapore. Trader ranked 132 in 2018's Fortune Global 500 list for China. The difficulties came to the foray in April when it sought debt extension from its lenders and sold copper below market rates amid a cash crunch. Wow, they were willing to dump copper collateral below market prices. And if you paid attention to China for a decade, you know that there's been stockpiling of copper by state-owned enterprise and private traders for at least 10 years of copper in warehouses. So there's a bunch of these stories of smaller banks starting to have problems, stress test warnings. There's now 6 banks that have either been bailed out, taken over, absorbed by a larger bank. Okay, let me take a look at listener questions and comments. I go where the data is, I go where the information is. And there's a lot of really bad China stories in the last month. More warnings about the banking system. For now, they're able to get the large banks, the 4 largest state-owned enterprise banks, to cover a lot of the problems. But at some point, those large banks are going to have problems themselves. And then that's when the SHTF. Yeah. Wayne says he's glad he has a Real Vision TV subscription. Yeah, that interview is really good. Emma liked it. I spoke to Emma before I started recording this podcast. She is too busy for an interview right now, maybe January or February. I may have another good guest booked, though, in the next couple days. I have to follow up. Anthony says he thinks the collapse of the Chinese Communist Party is going to look like the French Revolution. I disagree, Anthony, because I think a lot of people in China, especially the people who are very poor and from rural areas and not very well educated, they're brainwashed. There's a lot of areas of China where things are similar to North Korea. The difference is China has way more money, way better technology, way better military than North Korea. But there are the amount of brainwashing for many people inside mainland China is very similar to North Korea. So I don't think it will look like the French Revolution. I think it's more likely to look similar to a combination of maybe Japan and the Soviet Union. I know from my top source in mainland China who has spoken with some Chinese officials that they think worst case scenario is Japan. They're confident in that. I would call it hubris. But the people running the Chinese government, the regulators in housing and other areas, they're very confident that worst case scenario is Japan. They think nothing worse than that will happen. That they can just engineer a relatively soft landing compared to what happened to Japan 30 years ago. Harmony says China can pass around its Nazi dollars in-house. The world is wising up. Unfortunately, Harmony, Xinjiang was able to sucker the IMF and World Bank into raising money there, and also U.S. bond investors, municipal bond investors, pension funds. They invested in bonds that Xinjiang offered. And what do you think the money was used for? Hundreds of millions of dollars. It's gross irresponsibility. It's gross negligence by the investment manager custodian to get your couple extra percentage points return to invest in that stuff. Absolutely horrible. Anthony, they already have a lot of them. A lot of the political elites in mainland China they've stolen hundreds of millions. Some of them already have dozens of really high-end pieces of real estate outside mainland China. So they already have their escape plan. Some of them have stolen more than hundreds of millions. Hundreds of millions. My buddy Christopher Martinson was talking on Twitter about how the Federal Reserve is causing all these global housing prices in Vancouver and Seattle, and it's not all the Federal Reserve and the other central banks. A lot of it is money that has left mainland China, fiat currency and credit that's been taken out of China and turned into dollars and euros, Australian dollars, British pounds, and real estate was bought. Okay, I'm looking at listener questions and comments. There's no super chat. So I'm pretty much going to wrap it up. I have a lot of stories here. There's 10 if you want to read this more in depth. But the defaults are on dollar bonds. Most of the defaults are on dollar bonds. Now, the People's Bank of China can help Chinese companies, private Chinese companies, with their RMB debt, not with their dollar bonds. China is rationing dollars. And then, of course, Luke Groman's on Twitter saying that China's dollar problem is a problem for the U.S. It is not a problem for the U.S. The U.S. is moving supply chains out. U.S. corporations are moving supply chains out of China now. I disagree with Luke. A lot of U.S. corporations that made investments in China, their investments never came to fruition. They never made much, if any, money. And some of them that did make a lot of money, like Apple, now their market share has collapsed. So they made money for a while in China. They made money with lower manufacturing and selling iPhones in China. And now their market share has collapsed in China. So Apple is now weighing whether or not it's worth being in China anymore either. And I think that's why, in addition to the tariffs, that's why they're also moving manufacturing back here to the U.S. But you're seeing a lot of U.S. corporations. Now, obviously, there's some exceptions like Costco and others. But a lot of U.S. corporations thought that there was going to be a lot of profits in China, and there hasn't been. I criticize all governments. There's immense problems in the U.S. government. The European Union is a disaster. Chinese government's an enormous mess. So bull market and corruption. Could spend hours and hours talking about corruption in different countries. That's how bad it is. Okay, well, I want to thank everyone for listening to this podcast. I try to come up with very unique insights, information, research, and education. So thank you very much to my 200 Patreon account contributors, my dozen or so PayPal contributors, and people throw me a tip once in a while, so I can focus on doing content, research, and analysis like this. So there is a lot of global macro problems. Stock market hasn't crashed yet. And I think that's because the politicians, the central bankers, and political elites in all these major countries, they don't want their stock market to crash. So they're all telling their central bankers to prop up the stock markets as much as possible. Someone in the comment section tried to make fun of me for not being long the stock market in this. I've done better on some of my stock picks than just buying general stock market indexes. Let me say that. I won't name all the stocks I have, but I've done better than general stock market index, especially in the last 12 months. I've more than outperformed the general stock market indexes. And my Patreon contributors know this, because there's a lot of content behind the paywall there. And there may be a couple more in the next week or two, we'll see. Oh, thank you for the super chat, Dimitri. I'm not sure what you want me to cover on student loans. What would you want me to cover on student loans? If you want to learn more about student loans, read Jim Rickard's new book, Aftermath. He has an entire chapter in there about student loans, and he thinks that if a Democrat wins in 2020 or 2024, that the student loans will be monetized and that the government budget deficits will increase by over $1 trillion per year, bailing that out. He thinks that that will be a key campaign promise for young adults who are either in college and can vote or just graduated and can vote. Risk of defaults. Dimitri, there's already a lot of defaults. The problem with student loans here in the U.S. is you can't discharge them in bankruptcy. They'd have to change the bankruptcy laws. So there already is a lot of defaults. There's a lot of people that have not made a payment on their student loan debt in 6 months or more. I don't know the exact percentage offhand, but it's high. Government defaulting on guarantees. Well, as long as the U.S. has a world reserve currency, they could theoretically print it, but it depends if Congress approves a bailout like that and how it's done. But right now, individuals cannot declare bankruptcy and discharge their student loans. Jim Rickards talks about this in his new book, Aftermath. He spends a lot of time talking about that in the book. Thank you for the super chat, Justin. I'm not familiar with the derivatives on student loans. Oh, thank you for the super chat, William. Yeah, so if you want to go into this about what the Chinese banking regulators are planning, the warnings that they're giving, there's a lot of warnings coming out. This is very unusual for a central bank to issue this many warnings, but it's also very unusual for us to get warnings from the Bank of Japan, the European Central Bank, and the People's Bank of China. So we're getting a lot of warnings from these major central bankers. So which means that in my opinion, this means they think the next year or two something really bad is going to happen. Now, the stock market might not initially crash. I mean, if they print enough, if the fundamentals, or there's failures in an industry, but if they print enough money, the nominal value of asset prices could theoretically go higher. That would be a melt up or a crack up boom, theoretically. Oh, 290 people? That's pretty good. YouTube will probably demonetize this, and I'll have to review. They've been demonetizing basically all my videos now for over a week, and I have to protest them. So I normally don't get the manual review changed, where I can actually start earning a little bit of ad revenues on each video until like at least 12 hours later. But at least my subscriber count has started to grow again. I'm over 29,000 YouTube channel subscribers, and my views are still okay. But the ad revenues, they're taking away from me. It's been downhill now for over 3 months. It's been rapidly downhill. I think it's down like 50% from 3 or 4 months ago. But good thing for my Patreon and my PayPal.